Well, leading stocks have been acting somewhat well as the major averages move sideways overall, or you could say in baby steps higher in the case of the NASDAQ as they attempt to resume their uptrends. But really they've been more or less going sideways for a number of weeks here, kind of reminiscent of what they did starting in December and then finished in January. So it was about a 2-month sideways move. So it looks like we might be in the middle of one right now. Some stocks have worked their way higher with FANG stocks breaking out, though not in definitive fashion, but just as with the major averages, more in baby steps. And so the trends have been relatively mild, with stocks often taking 2 steps up and 1.5 steps back. So should a stock take 3 or 4 steps up, representing a several percent or greater gain, that's often the place we suggest one take profits. Of course, that's in context with the stock's chart, that the price has got ahead of itself. We put out a new kind of report. It's not new to in terms of the ideas behind it, but the name is new. We call it the VoSI Voodoo Report. And that's focusing on low-risk entry points by way of methods such as the Wyckoff undercut and rally formation, or the volume dry-up formation, which we call Voodoo. The Chinese stock BZUN was mentioned in that report. It moved higher, but it may consolidate further as it attempts to finish rounding out its base. And other Chinese names have been moving higher, but in unconvincing, sloppy fashion, such as JD, and you got Baba, which has been, these have been on our list for some time now, and Momo as well. But you can see their moves are a little bit all over the map, although there's sort of an uptrend that's taking place. We also mentioned Snap, which is an
Hey,
IPO.
Dr. K, I think we also have Netties on the focus list, and that's breaking. It's breaking both the
Yeah, I was about to
278.80 low here, and then the 50-day here.
Yeah, just about to mention that one actually, because it was testing its 50 earlier today, as well as the low of its viable gap up day back in February, and as you can see, it's breaking definitively below those points. So obviously you want to have risk control in place. And generally, when a stock has had a viable gap up, we don't give any room to undercutting the low of that viable gap up day if it's been trading at least 6 days. And I wanted to mention Snap was another stock we mentioned on that report. It continues to trade light, though is failing to hold its 10-day. So it's trying to regain it.
But it is holding the 20-day exponential actually, which just showed up the other day. You see that?
Yeah.
So here it's.
Yeah.
Let's see if I can blow it up here, but you can barely see it on this chart.
It's faint, but it's there.
There it is. So you see it running across there. So that's actually, it's going tight sideways, volume's drawing up. So I would say that's constructive action.
Yeah, overall.
So yeah.
Overall, okay. Make sure that earlier today, when it looks like it's well, it was breaking below the 10-day, you could see it was doing it on low volume. So that should not be reason to get whipsawed out of your position. And speaking of whipsaws, we had a request to give homage to Ed Seikota's whipsaw song as the recent pullback on the models. That's the VIX volatility model signal may have shaken out some of our members. As I've said, success in terms of navigating these models depends, especially the VIX model, depends on one's ability to avoid getting shaken out by fear during the inevitable pullbacks. And the pullbacks in the VIX model can be a lot sharper, tends to be a lot sharper than that of the market direction model. So if you have tighter risk controls, then you might wish to either position size smaller to avoid getting whipsawed, or you could also set your own stops, because obviously some of the stops that I'm using typically are on the order of a few percent or less. Not always, obviously. There are times when I'll let it run a little further, depending on the situation. But I think a good part of the time, the majority of the time, you can expect 3% or less in terms of where the fail-safe is going to kick in. So if you see the model going beyond 3%, like it did yesterday, I think it went to 4%, that's not any reason to panic, especially if you have a smaller position size, and which allows you to psychologically sit through that sort of pullback. And of course, by the way, the pullbacks can be more than 4% as well. It's just not very common for that to happen. And also be aware that you have gap up, gap down risk as well, especially with 2x instruments like UVXY. So I've written, as I'm sure you all know, that one can expect a string of losses at times with this model, which can be enough to discourage an investor from taking the next signal. So it's important that you customize, familiarize yourself emotionally with how the model trades, so you can minimize that issue that might crop up at critical junctures where the model is having a setback of some sort. And familiarize yourself with the results table, etc. So you can also see that there are times in there where the model can get whipsawed 3 times in a day. Now it's not common at all that happens, but it can. And the model walks a tightrope because it often avoids getting pushed prematurely in the cash, while it also protects the downside by switching out of its signal if necessary, as risk control is obviously the most important rule when it comes to investing. And with all that said, Gil, how are you seeing the markets?
Mostly on my quote screens. So a lot of green, red, white, some plus signs, some minus signs. So that's basically what I'm seeing. How's that?
I like it.
Somebody's asking a question just real quick here. You think NetEase is a whipsaw? No. He's talking about the VIX. The VIX, not NetEase. NetEase isn't a whipsaw. NetEase is a doggy stock right now. So, and it's breaking. But again, I've been talking about this for a while. It's kind of late stage. I mean, this thing's had a big move. So you can see this as I scroll through the weekly chart. And of course, the line or the last stand is at the 10-week line, although it could come right back on top of this cup. Never really formed a handle in here because they're all up weeks, but now it's coming in, so that may be done. But you're also seeing, Weibo was looking like it wanted to turn, flashed the pocket pivot last week. It's like a bottom fishing pocket pivot right there. It's trying to round out. That's like a Louis formation, right? There's the L, so it's starting to turn it into a U, but it fails. So maybe the Chinese names are a little bit cautious going into, when is it? Is it?
It's Thursday. Trump's meeting with China on Thursday to discuss the trade issue. So I think there's a lot of nervousness ahead of that.
Yeah, so some of these might be trading on that. So you might just see these come off and then set up again or bounce out. So one pattern, I think I talked about this last week, one setup that I'm noticing works in this market is the moving average undercut and rally. Because you go back, I think I talked about this last week or the week before, Tesla's looking really ugly here, like it's totally failing. And of course, when we were talking about it, here's how the ugly duckling works in this market. You get, this looks like a fractal head and shoulders, right? I mean, it's almost textbook because you get the big volume here, defines the right side of the head. And so, boom, this looks like it could be breaking down. But what happens? It undercuts the 50-day line. And when something's looking that obviously ugly, I'm always attuned to the idea that it might just end up being a big shakeout, and then it's going to turn and fake everyone out. And you actually see that a lot. I mean, you'll get the moving average violation fake out where something actually violates a moving average, which is a technical sell signal, kind of like, I don't know if it, yeah, I guess it did it back, Tesla did it back here, because you close below the 50-day here, and then you close below the low of that day here, but then that's just the bottom and it turns back to the upside. So here you undercut the 50-day again, and then you turn back above it, so you could actually come in and buy the stock there. and use a 50-day as your stop. So you'll see that this sort of setup happen a lot in this market, believe it or not. And it's typical of this market to just try and fake everybody out. I mean, yesterday we had the market, the Dow came off, 114 points early in the day or in the first half of the day, and that was starting to look pretty ugly. And what happens, it turns around and stabilizes. And then today we start to sell off real quickly at the opening. It looks like we're going to head lower. The futures are down pretty good. The NASDAQ futures down, what were they, 20-some, 24, 25 early in the day when I first got up. So, you know, everything's looking grim, and it looks like everything's going to gap down and sell off. But, well, what happens? We turn around and go back up. So if you look at the indexes, it looks to me like they're just consolidating. And unless you see a major breakdown, that's pretty much what it is. So I know somebody is talking about a megaphone top or something. This is a megaphone. So I guess maybe if it tops, then you could say it was a megaphone top, but I don't know if it has any predictive value, so I wouldn't really get carried away with that. But if you look at the S&P, it kind of looks to me like it's just trying to round out some kind of a base here, and it's consolidating. So you've had a pretty good move since the election. Let's go back to where the election was back here. So you've been rallying, you know, slow uptrend, a little bit of a spurt here in February, and then we've been consolidating. So this is actually constructive, I think, in terms of consolidating the prior gains that we've seen since the election. So I don't really have any issues with the action. It all boils down to what's going on with the individual stocks. And of course, we see things like Netties breaking down. But that's the way this market has been. So, you know, you're just probably basing here, and you'll get some rotation out of some names and into other names. So, you know, we could see, well, you're seeing Tesla pushing through the 300 level, so that kicks in the Livermore Century Mark rule at the 300 level, and it's breaking out. So the only thing I'm a little leery of, it could be a little bit obvious, and all of a sudden everybody loves it, and they're talking about how great it is. And a few weeks ago, nobody loved it. Everybody hated it. It's overpriced. Sounds like the talk about Amazon way back when. But today, Amazon, which is also on our focus list, has cleared the 900 level. So that kicks in another century mark rule sort of buy situation here on a big stock NASDAQ name. So elsewhere among the big stocks, you've got, on the NASDAQ, you've got NVIDIA breaking down. It had a downgrade today. So it's looking a little bit on the weekly chart. I guess you could say this is starting to set up as a head and shoulders, and maybe it is going to break down for the 200-day line. That's a possibility. I wouldn't discount that. And the bottom line is today, on the gap down move at the opening, you could have shorted it as a shortable gap down. The only issue here is that you're undercutting this prior low here, so that could be a problem. It could undercut and turn and rally. So even if you're trying to play this on the short side today, the one thing I would be watching for is if it turns back above this low, because this low is was a nice shakeout last, I think, was that Monday? Yeah, on Monday. And when the market shook out, remember when it gapped down big and then it didn't want to go down anymore and it just turned right around? So this low is 103.58. So you might set an alert on NVIDIA. And if you see it go, I'm going to do that actually on my system right now, for those of you who might be wondering. Those of you who are curious yellow, I just put at or above the on my e-signal. So it's just a simple alert. Ta-da, there it is. And we're going to do it at or above, what was that low again, people? 103.58. So we're just going to put in here at or above 103.58. And if that goes off, then we will come back in on the long side of the stock and see if you get a flip back to the upside. That could happen, because remember, today's move is basically being caused by a downgrade, right? What were you saying, Dr. K?
Yeah, downgrade.
Yeah, so you know,
how reliable those are.
Okay, let's see. Snap is rolling in a little bit here, 22.30. I think it's just consolidating. So if it gets down close to the lows of this range, say 22, I think you can just build your position there. Let's see. Whoops, that's not the list I wanted. I love this stock though because all the goofballs talking about it's a high tide. It qualifies as a high tide flag. I don't know. I just have to laugh at that again. Sorry, I was doing it last week too, but it's like, give me a break. It qualifies as a high tide flag. What does that mean? Mortgage a house and load up on the stock? If you did on that breakout, you're now underwater, and you're probably underwater 7-8%. So if you're a typical Can Slim cult member, then you're gone. You're out of the stock, and you lost money on something that was qualified as a high tide flag. So get rid of that. I would just throw that whole baloney out the window. It's garbage. Anyways, where was I? Before I was so rudely sidetracked by this high tide flag. Let's see. I want to pull up the focus list. I believe this is the current focus list. So there's Amazon. So we're just going to go through them this way. Amazon cleared the 900 level, so it is a century mark buy right there. And then we have BABA. I'm just going to run through the list, pulling into the 20-day line. See now, it's shown a tendency to hold the 20-day line, 20-day exponential, the green line. So now you're coming into a place where it could be viable. And in this case, I think buying as close to the 20-day exponential as possible is a good idea, rather than trying to buy it along the 10-day line, just because it has shown a tendency to move below the 10-day line frequently, but it finds support at the 20-day exponential. So I think that's kind of where you want to be. Baozen, is that how you pronounce it? I can ask my kids since they both speak Chinese. That had a pocket pivot yesterday, so that's acting okay, but it's tight, and we'll see if it gets anything going majorly to the upside there. Chemours or Chemours or Chem Hours, I don't know. That was viable along the 20-day line earlier, so you had the voodoo type action on the pullbacks in here. You can see the light volume on in here as it's holding up along the 20-day, and that was support along the lows, even though it dipped below the 20-day line once in a while, which I think you can allow for that if a stock. So for example, you did, even though you moved below the 20-day line, don't get your panties in a bunch there, because you're basically holding along the lows of the base, and it could simply undercut one of the lows, which it did. It actually undercut, I believe, this low. Let's check that real quick.
Yeah, that was the one.
Yeah, it undercut that low and turned. So there's an undercut and rally. So again, that sets up an entry point, as opposed to, you wanting to get freaked out and unload the stock because you think it's violating the 20-day or whatever. Be cognizant of where you are in the patterns. So, one thing you could try doing is using charts that have no moving averages. You might try that as an exercise, just to kind of get yourself weaned away from focusing entirely on moving averages, because other areas do come into consideration, mainly prior areas of support, whether they're above or below a moving average. So the one thing about the moving average is it makes it obvious to everybody, especially the 50-day and the 200-day. So Coherent is slightly incoherent here as it moves below the 10-day line. Now, one thing to keep in mind here is this thing has great earnings for this year, but then they slow down next year. And that's been the case with all of these semiconductor names. But institutions try to buy them when they're coming off of negative earnings growth and starting to turn. So basically, they'll buy them at the bottom of the cycle. How do I know this? That's what a lot of guys who ran tech funds that we advised back when I was the head of institutional services at O'Neill. That's what they told me. It's like we buy them when the cycle is turning, not when the cycle has turned. So in this case, you can see that on the chart. So they start buying it off the lows over here, and it's run up a long way. So this thing's come a long ways. It's being added to the S&P 500. So you have to be cognizant of that. Obviously, if you bought it along the 20-day moving average, you're doing fine. You've got about 5% in it, maybe a little more. But that's just something to keep in mind when it comes to semiconductors. So, I don't know why I've never really embraced the idea of buying them off the lows, because that would have been a nice sort of bottom fishing Bible gap up way back there at around $116 or so. And soon, see, notice how it got just above the 50-day right up the bat. So if you saw this happening, I bet you it happened after earnings. You could have bought it right at the 50-day line with the idea of using the 50-day line as a stop. So I think in the future, speaking for myself, I want to be more cognizant of the turns and semis when they occur. Because I know that institutions, I know this from my own experience in talking to people who ran mutual funds, that's what they'll do with the semis. They buy them at the bottom of the cycle. So the earnings can still be negative and the stocks will be turning. And then you see 3, 4, 5 quarters later, like Coherent. What's the latest annual estimate for Coherent? Isn't it like up 108%?
Yeah, it's 108%.
Yeah, so that's probably already baked into the stock. So, it may be closer to the end than the beginning. So who knows? But in the meantime, all you need to do is focus on what it's doing right here, right now, with respect to the action on the 10-day and the 20-day exponential moving average. So anyways, let's look at Facebook. Facebook is a big leader. It's just been trundling higher. It has had a couple of 5-day pocket pivots over the last week. So it's acting fine ahead of earnings. I think, when are earnings? The end of the month? Beginning of May, so in about a month. Okay, let's see here. JD, another Chinese name there. They're owned by Tencent, and Tencent took a 5% stake in Tesla, as you all know. So maybe there's some halo effect here. I don't know. But the stock's just tracking sideways along the 10-day and the 20-day moving average. I think there was an article in IBD on the stock over the weekend. I mean, we put this thing on our buy list down here around 25, so we haven't read any articles about it, unfortunately. But it might be a little bit late for that because it's up here about 20% and hanging up here and just going tight sideways. And I guess with earnings coming out, come out on these guys on, when do they come out?
They're going to be in May, so
Yeah,
about a month.
Second week of May. I'm showing 5.8. Let's see. So that's hanging tight, but I don't know if you want to buy it necessarily. MKSI. It's going nowhere. I don't know. This is kind of another one of these. This is an instrument stock. So it's just hanging along 50-day. I guess if you like this, this is where you would buy it. So anyways, let's see. Momo. I think it's kind of extended, and probably what you want to do here is just let it drift in and maybe base for a little while. If it undercut this low, that might be a very nice opportunistic entry point. You had the Bible gap up here. It's done well since then, but it's just kind of trundling back and forth, or shall I say whipsawing back and forth. And this low here might be what comes into play as a possible undercut and rally point. Let's see, low 31.21. I think in this market, using the undercut and rally setup is very useful. It sort of fits with this whole sort of ugly duckling market. Let's see. Somebody's asking about Baidu. Baidu has had some BFPB and a Louis breakdown, but came back. Data looks like a mess, but weekly sightings. How would I look at this? It looks kind of to me like it had an undercut and rally, and it rallied up to the 50-day, and it's a short right there. That's what it looks like. So
yeah, and the volume is well, it's 9% right now, above average, so it could increase.
Yeah, so it doesn't look so hot to me. That's what it looks like on the weekly. It's not really going anywhere. I'm not going to buy this now. If you were smart and fast and you saw it undercut and then turn here, you could have bought it, and it would be good for a trade up to the 50-day line. Now remember, before you get all carried away with an undercut and rally move and everyone that you see is one you want to jump all over, remember that it started out as a cover point when I'm shorting a stock. So for example, this is a good example, because this was a short up here and then it cracks, but it undercuts these lows. So as it comes down in here, I would be covering my position and then looking to re-enter either up at the 20-day or the 50-day. Okay, in this market though, what I've noticed is that a lot of times this will set up a buy point, but in leading stocks primarily. I mean, you can try them for trades on doggy stocks like this, but it's mostly leading stocks. You know, we talked about this with this CC, you know, so stocks in a base, and here's where you get the undercut and rally when you, this low undercuts this low, so that, and it turns, and that gives you an undercut and rally entry point, okay? So that's the sort of thing where I like to use undercut and rally situations, or something that's trying to turn and is showing better signs of a turn. Just trying to throw it at every single stock you see is kind of dumb. So, and just oversimplifying the thing. So you don't want to do that because you'll get caught buying something and getting whacked. So it's very useful with leading stocks in this market because that seems to be their best setup. When they break out, you know, and everybody wants to buy the high tide flag, it doesn't work out that way. See, now you're pulling into the 20-day, so if the volume dries up in here, it's possible this could be buyable. So, you know, you would watch that. But at this point, anybody who bought, say, 56, 57, because that would have been within range of the buy point, which I guess is here at 56.14, you're now probably stopped out, unfortunately. So you're better off trying to enter on weakness. But notice, you know, it's getting obvious here. It's had a big move. So I don't know why it has to go to 100, although I guess it could. But if you're going to buy it, this is probably where you'd be looking at it. And then you can set a tight stop near the lows. So I'm going to go through a couple other questions. GoDaddy, you have some thoughts on this one, don't you, Dr. K? It's kind of
Yeah, well,
like
this
no
one has always
GoDaddy
been
to
pretty
me.
sloppy, as you can see. There's, you know, it looks like the stock's having mini seizures. It can't seem to break out, even though the volume's there. It's the nature of the market. Obviously, don't buy the breakouts, buy the pullbacks. But you know, looking for a clean, you know, voodoo pullback means not just low volume, but also the price action should be relatively tight. And you know, this one has not been displaying that kind of tight price action we like to see. So I wouldn't be doing anything with this right now until it cleans up its price.
Yeah, I wouldn't have anything to do with it. So I think there are better stocks to own. You know, think about where are the big stocks. If you think about it, if you were alert to the buy points, ResMed, not one I would be playing either. Although it's up there, I guess. What do the earnings look like? This is an old one. Don't they make the snoring things, the PAP,
Yeah,
whatever they are?
It's for sleep disorder.
The earnings are growing 0%, 5, 9, 5 over the last 4 quarters.
It'll put you to sleep.
It's a dog. I don't really see any fundamental drivers here unless there's some big big turnaround story here, but I don't really see it. So now would you short it? I don't know if I'd short it necessarily either. Maybe you could, I suppose. If it's breaking the 50-day, you could always use it as a tight stop. So, but it looks like it's just chopping back and forth, so I don't really see anything that coherent here. Let's see. Netflix. That is just a choppy stock. Probably doesn't go anywhere until earnings, which I believe are going to be on, well, in a week or two, right? Is that next week? What's for now? 2 weeks from now, I guess. A little less than 2 weeks from now.
Yeah.
So I don't know. I don't think I'd be getting all excited for this necessarily here. It's pulling back to the 10-day. It seems like you buy it on weakness, you know, another one of these situations, but it hasn't really gone anywhere since the Bible gap up. So it's a little bit slow. I mean, Tesla's been the faster mover, and that's because you get a lot of shorts in there. So Netties we already talked about. QTNA, somebody upgraded the stock today, so now it's turned into an undercut and rally. So theoretically, you could buy this using, I would use this low. Well, you could use any of these lows, probably this your lowest low, so 2015 would be your stop, and see if it shoots out of here. I mean, these guys, I thought, I saw the news on it. What was the price target? Wasn't it something like 28 or something? What, did you see that, Dr. K?
I don't remember the price target on it, but that wouldn't be surprising.
Oh, thank you for reminding me about JPM there, ma'am. I don't know if any of you heard that. That was my briefing.com telling me there's a news item on JPM.
Oh, by the
Let's
way,
see.
it's 28. Yeah, it's a 28 price target.
28 was the price. Yeah. Okay. So yeah, it's worth a whack. So it's really thin though. Average daily volume is like 260,000 shares a day. Cena Corp hanging along the 20-day and the 50-day, and this, I would say right now you're running, what's the volume level? You're running minus 60% below average, so that's in a voodoo buy position. So you could take a shot here if you wanted to. When did they come out with earnings? 5/8, so not for a while yet. And they have strong earnings growth, surprisingly. They're still a player, aren't they?
Yeah, they're solid for the next 2 years.
Yeah, I mean 50%, 53% this year, 50% next year. Pretty solid, it looks like. But of course, you know, solid earnings haven't kept a name like Weibo from getting tagged today. That one's trying to come out. But again, some of this, you know, notice how the volume is relatively low. I know it's running about, what, 9-10% below average right now, so that's not what I would call heavy. And so, you know, it might dry up, and then tomorrow or Thursday when they have the meeting, you know, it's very positive, and so all the Chinese names go bonkers. So let's see. Square's just hanging out. It's not really doing anything. You got volume running right now at minus 11% on my my readout, as Bill and Ely used to call it. What does your readout say? You could tell he was in the military. I thought, because that was what we referred to as when he was asking what your price was showing on your quote monitor. What does your readout show? Anyways, Square just hanging in there. I mean, volume is running low, so it looks like it's probably in a viable spot. I suppose the closer to the 20-day or this low, the better, but it looks okay. Nothing really exciting. Earnings are coming out on May 3rd. And we talked about Tesla, and Tesla has been on our buy list when it had this pocket pivot here. So that would have been right here. So there's an undercut and rally on the 50-day, and we're pushing out 302.49. So it looks like it wants to go higher. And you know that there's probably a lot of shorts just getting creamed over here, so they're not having a good day. Trade Desk is another second to last one. Don't worry, I'll get to it. Let's see. Yeah, that's not holding the 50-day, but maybe it undercuts this low. I mean, this thing had a big move, and you really had to be buying this along the lows, you know, near the 50-day when it looks like it's going to break down. But notice how it undercuts the 50-day and it turns back above it. So if you can catch a undercut and rally move at the moving average, then that's something to come in on rather than chasing the strength, which you could have done and gotten away with for a while. But ever since it's broken down to the 50-day line, it doesn't look that coherent. So it's a tough one to play. And last but not least, Viva, which is just continuing to move higher. Earnings come up at the end of May, so you got a long time. So yeah, there's no buy point in here. I think you had a pocket pivot back in here. Was that right here? You had one? Yeah, it's right here. That would have been 7 days ago, 7 trading days ago. So you had a pocket pivot right there. But the thing here is on the pullbacks to the 10-day line is where you should be buying it, not necessarily buying the strength. So, you know, buying strength is not advisable in this market. Buy weakness. Think like an ugly duckling, or actually think like an algo, and keep the ugly duckling near and dear to your heart. So do you have any more questions? I notice people are kind of quiet today. The market's it's a little bit slow. I mean, I'm not really going anywhere here with most names. You get the Tesla moving, but you're not getting a lot of movement, you know, one way or another. That's what I would call decisive. Even with Snap, you know, which I'm long. I'm actually, like, I bought it down here, sold into the move, bought it back in here along the 10-day line. I've been messing with it, and in and out with part of the position, but holding a core because it looks like it wants to come out of here. Maybe by the close it will, although the Dow is starting to flounder a little bit. So, but I think it's still just a matter of chopping sideways. Wait to see what the jobs number looks like on Friday. Wait to see what the meeting with China looks like tomorrow. Personally, I think Trump is a pragmatist, and he demonstrates that. And I even think that his saber rattling yesterday, which seemed to unnerve the market a little bit with respect to North Korea, I think that's a smart approach. So I think North Korea has got to know, what's his name, Kim Jong-il? Is that right, Dr. K? Someone going to help me on that?
Yeah.
Yeah, does he really want to risk getting... he fires a nuke at Japan or somebody, and all we're going to do is drop a bunch of nukes on him, and it won't take that many to wipe North Korea off the face of the map because, or off the map and off the face of the earth. I'm mixing metaphors here. I notice people do that on TV all the time now. They mix metaphors. So off the face of the map, actually off the face of the earth, wipe them off the map, whatever. It wouldn't take many nukes to do it. So, and we need to get rid of our old ones. So, anyways. So I'm guessing on Thursday everything's going to be hunky-dory, and you may see some of the Chinese names pop out of here. So that said, I would keep an eye on some of them because they could be coming into viable areas, especially when they start to look a little bit ugly. So remember, think ugly duckling. And that's one of the things about that's one of the things that we're trying to accomplish with the VoSI Booty Report. We're going to start writing that as an sort of an ad hoc newsletter or article, and we may put out a short report, or we may put out a long piece on a few ideas once a week, or whenever we think we have a critical mass of ideas that we want to discuss and go into some of the details. So, and I think we're going to put that together. What we're trying to do right now is come up with bundling our services. So, because some people find they want just the market direction model, the others just want the reports, some want everything, some want to read something, some want to get alerts, and so we're trying to figure out how to bundle it so people can pick and choose the services they want. So, anyways, I'm going to go through some names I'm looking at. If you notice, when we think about the ugly duckling, this stock certainly looks like this is an oil name, and of course if you look at a lot of the oil names, they all look pretty ugly. So as I told you guys last week, and when someone was asking how do you find double bottoms in progress where they might be forming, well, I keep old buy lists. So Parsley Energy was on my buy list back when it was looking really nice and breaking out. Even looked like it just wanted to rock higher. I mean, look at this here. You get big volume on the weekly chart, highest volume in the pattern for a while, and it doesn't go anywhere. It just, I think that was on the news that the OPEC group was going to cut production, and so it never went anywhere, and this is where it failed up here. But now it's kind of rounding out, and what you'll notice on the weekly is that it's undercut the lows over here. So it started to undercut the lows and shakes everyone out here and washes everyone out. Now it's turned. Chime in if you have any observations here, Dr. K, because this is one ugly duckling name I am looking at currently, and I probably should be looking to buy it. I'm waiting to see. What I'm basically watching here is I know that I believe I have a pocket pivot at the 20-day line here. Is that correct, Dr. K? That would have been 1, 2, 3, 4, 6 days ago. Oh, that's here. Yeah, so you have one bottom fishing pocket pivot. It runs up to the 50-day line, and then on Friday you get another bottom fishing pocket pivot. But it's not really holding above the line per se, so you have to make some adjustments for this. And what I'm looking for is some kind of pullback into the 20-day exponential at 31.55. So we need to check when are these guys announcing earnings. Oh,
not for another month.
Pardon me?
May. Over in May.
May 3rd, that's what I'm showing here. So if you go on briefing.com or the company's website, you get it for sure. But you can see it's trying to turn. So some of these oils might come back to life, and I think you have to look at them that way without taking a rigid, sort of can slim, buy strength, buy breakouts only approach, because this market still works this way. And I definitely think you have to keep these ugly duckling setups, and that's one of the reasons why we've initiated the VoSI Voodoo report, which is intended to highlight some of these buy on weakness type techniques or ugly duckling techniques in the case of the Wyckoff Spring or undercut and rally, as we call it, UNR, and the Wyckoff's retest or Wyckoffian retest. So spewer bottoming action, that I don't know. I think, how do you know? I mean, I don't know. That seems like a sort of a silly question, Herb. I'm sorry. I know I met you at the conference. It was nice to see you there. And but I mean, is it bottoming? What it looks like is a bear flag. So I don't really see, unless, let's see, if it's this low here is 619, it's at 621. It's tried to do that a few times, get above that low. So I understand you're looking at an undercut and rally, but that's what this looks like. It's not a leader. So, and I don't really see this. I would wait for something like this to set up. Go ahead, Dr. K.
Look at the weekly on that stock as well, and you can see that the trying to bounce after a sharp pullback over the last few weeks. And last week's bounce was really anemic in terms of the volume, and this week doesn't look much better. So you got to condition your eye, your chart eye, into seeing what the stock's trying to tell you. And in this case, there's no evidence that it's reached the bottom.
Yeah, the whole group looks like garbage. And for a while, it looked like they were trying to turn. First solar, making lower lows. Maybe they'll try and turn here, but I think you can give them some time to set up again. And I know Scotty, I don't know if you're out there. He's been a big fan of Solar Edge, which actually looks like it's trying to build a bottom here, and it's gotten some pocket pivots moving up above the 200-day line. So it's possible this could be bought using the 200-day line as your stop. So it sort of fits into the Teslian theme of battery storage and whatnot for solar, and I do think that's going to be a big area going forward, and I think that's one of the things that probably drives the whole Tesla theme. But I mean, that's kind of an old story. They're not just a car company anymore. Good thing, because all the auto companies got their heads handed to them yesterday, if anybody was watching. General Motors, not like they haven't been. The whole time Tesla's been rallying off the 50-day, all of these stocks, General Motors, Ford, what's Daimler Chrysler, DX? No. DXC? No. Somebody help me out. Anyways, some more questions. Let's get to those. I do think is it Hervé, I think. I forget how you pronounce your name. Can I just call you Herv for short? Anyways, I do think the sedge looks interesting here. So, although I think probably buying off the 50-day would have been the best ugly duckling approach, but that doesn't necessarily, it isn't necessarily a bad thing. Looking at it up here, I think earnings come out. When do they come out? Let's take a look at this with my handy dandy indicator. See how my indicator bars in here are starting to turn a little nicer shade of blue like they did back in here. So you can see in here, and then you're turning in here. You're getting nice bright blue kahuna right there. But it takes a long time to base, so it's sitting here. Earnings come out in the second week of May. But now here we go, and we're back up to the 200-day line. That looks kind of interesting. So I would say of all the solar names out there, this one probably looks like it's trying to bottom. And we'll see. What do the earnings on that turkey look like, Dr. K?
Negative all the way through the next 2 years.
Lovely.
Well,
they make money.
They're falling. Earnings are falling over the next 2 years, and the last quarter was in the red. Well, in terms of compared to the quarter before, it was minus 27% at 32 cents. So it's not looking real rosy for this company as far as that.
Yeah, I mean, it doesn't look so hot. All right, let's go some other questions. CMG, Chipotle is trying to come back. That's what it looks like. It's at the top of the range, so, are you going to buy it here? The place to be looking to buy it would have been down in here. Now, let's see if there were any clues as to whether that was actually buyable. Well, what do you see? You actually will see looks like a pocket pivot right here. Right there. Let's see, 1, 2, right there. and a bottom fishing pocket pivot right there. So, and then you get some voodoo action here on this little pullback into the 20-day line, 50-day line. So that, there were some potential entry points there. So that would have been the spot to be taking it, not up here. So, the other thing is, I noticed that a lot of people will ask questions about stocks that are already up there. And that, to me, shows a tendency to be attracted to things by strength, by show of strength, when you have to be a little more, shall we say, creative about figuring out what the stock may actually be doing, and whether it's actually just forming a base, and that's, you want to be getting in along the lows of the base rather than chasing any strength that you see. So, I think that's where you want to be training your eye to be doing these days, rather than, any idiot can see this, any idiot with a chart book, as Bill O'Neill used to say, could see something like that. That's not too hard. But, picking up this action down along the lows now, you can see how there's a few things going on here. You get a shakeout, and it undercuts this low, and then it turns and rallies. So, there's a few clues there that you could put together, but you see how you have to, no, not sort of, you have to be creative about it. You can't just be mindlessly chasing strength. And so if you learn to do it, I think you'll find that there are a lot of better entries, low risk entries out there that you can implement. So.
Yeah, I mean,
I'm sorry.
The markets are not forgiving like they used to be, or there's much less headroom. So, back in the day, you could be a day or two or three late on a breakout even, and still have risk reward in your favor. But those days are long gone, and obviously, even back then, you want to keep risk under control at all times. So, in a interesting sense, the current market environment over the last few years has conditioned traders to keep a much closer eye on their risk control than ever before. So it could be argued that if the market should restore itself and return to, say, more forgiving nature, where you have well, that would require more money sloshing around the system being traded, then those traders who've now been through the hard knocks of having to polish up their risk control measures would be in much better shape to enjoy, the next big run the market may have. And I say that, if you have a big window of opportunity, like we saw continuously in the 80s and 90s during different periods of those market cycles, those are the traders I think who are going to ultimately do the best, because they're going to keep their risk controls smaller than, say, the guys from the 90s. I'm just thinking of myself. If I knew then what I knew now, I mean, my risk control would have been much more stringent during those days without sacrificing the potential profits. So just keep that in mind, that this is, everything happens for a reason. This is a great training school, I think, for traders of all stripes.
Somebody's commenting on NVO, Novo Nordisk. And here's a question. After the last few months, value stocks seem to make sense. I don't know where you're getting that idea from, because I wouldn't call Tesla a value stock. I wouldn't call Amazon a value stock. I wouldn't call Netflix a value stock. So maybe one particular name might work, but if you're this thing sells at 15 times earnings, and negative 4% growth, negative growth in 2017, 11% growth in 2018. I don't know. It's had strong moves before, so I don't really care much for it. I'd take Tesla over this thing any day of the week. So, and to me, I don't know. So, but I don't really understand the observation that value stocks seem to make sense. Stocks that go up make sense, not a particular value or growth or whatever else there is in between those. But I say whatever goes up is what works, and so I'd rather be owning Tesla over the last few months than I would something like NVO. So I don't really have anything to say about it. Strikes me as it's gapping up today. Maybe it's going to try and turn. I don't know, but it's not something that I see necessarily as viable. If you really think it's wonderful, and it's going to go higher, then the simple thing to do is buy it here and treat this as a viable gap up. Use the low of the day as your stop. So other than that, I don't really see the theory that it makes sense to be buying value stocks here. So, and I don't really sit around wondering whether something's a value stock or a growth stock. All I want to know is this thing dynamic? Is there a theme that can drive price performance? That's what I want to be in on. I don't care. I don't divide the world into little things like growth or value or whatever. So
yeah, your screens, if you're running your screens routinely, they will force your money into the best names, because that's what you're looking for, and so you don't have to worry about what industry group is going to lead or what group is leading. Your screens will show you just by default which are the best stocks, and this has happened many times, especially when you get good proper bull markets. The best industry groups, the best stocks within the best industry groups will show themselves via your screens. And before you know it, you're going to have a good chunk of your portfolio in those types of names without even having had to think about or try to predict any sort of future that doesn't even exist. So it's just, the successful trading is just a very then in the moment practice, and your screens can help steer you into the right stocks regardless of the market environment.
Daimler Chrysler was DAI. Don't see it there. I remember I don't know, whatever, forget that. FCAU is Fiat Chrysler. Oh, there we go. Yeah, that one kind of tanked yesterday. That's a thin little name. Well, not that thin, but, well, what is it? Yeah, it trades at what, about 38 million? Yeah, it's would barely make the cut. It trades a little odd because it's mostly trading on the European markets. Anyways, let's see. White House looking into carbon tax. All solar's jumping as of 10 minutes ago. Huh. Let's see. Let's see. Market's coming in a little bit. Dow's up 9. Hey, it'll just flounder about and then end up not doing much anything. Let's see. Somebody says Tesla's up 41% year to date and 22% in 1 year seems too late to me. Well, if you bought it at the beginning of the year, that's my point. Because you're misconstruing what my point is, which is, number one, you're saying that value stocks seem to be the place to be over the last few months, and I would argue that that's not true, because a lot of growth stocks, some that are arguably highly overvalued, have had big moves over the last 4 months. So when you make the statement that value has seemed to be the place to be for the last few months, I don't find that to be true. Now, the other aspect here is that I don't necessarily have to buy every stock in the plan. I'm just looking for the best stocks that are having the best moves. So anyways, I'm not going to belabor that point. Fortinet looks kind of interesting here. Pulling in on light volume. What are we running right there right now?
Fortinet's at minus 62%.
Yeah, so that's voodoo-like. And that might be turning, I don't know. But it had a nice move. Let me see if I can get this up here. It had a nice gap up move here. It could come back and test the 10-day 20 line. That looks interesting. The only real, the stocks that have been doing okay in the cybersecurity group have been Checkpoint and Symantec. I think Qualys is another one that's trying to turn. But notice you got a pocket pivot in Checkpoint yesterday. Earnings come out, though, in a couple of weeks, so not really clear to me that you want to be jumping all over this. But it is, I guess, would you call that a valid buy point there, Dr. K? I guess so, and it's pulling in a little bit, so
And
it's,
now it's okay.
yeah, it's
You know,
slow, you know, but so is Semantic, which is pulling into the 20-day line, so.
yeah, and the volume on that's minus 48% on Semantic, so it's
Yeah, so, but you know, these are slow, but they're acting okay. I'm just wondering if you get something more dynamic, and maybe it's time for a small stock like Fortinet to make the turn. So, and if you look at this on a weekly chart, let's go to this one. It's sort of in a doggy-looking pattern, but it was able to turn, and then you ran into some, you know, it's got a base here because it's working off some of this overhead, and I think it's pretty much spent enough time in my view. So if it's going to work, this is probably where it works. And we've had this one on our lists and off our lists already because it had a viable gap up, and that just went nowhere. But now it's had another gap up move. It's not enough for a viable gap up, but it seems to be acting better. So I think, you know, buying on low volume weakness might be a good place to look at this. So I did want to get back to the oil stock. So you have this one. Anybody have a favorite oil stock? CPE. Yeah, that one's trying to turn. So you know, some of these might be trying to pull some maneuvers here. CHK, Chesapeake, you can see that some of these are trying to turn. So, you know, I think I would be tuning into some of these as potential ugly duckling type plays and just watching how some of them play out. So basically what you can do is go through the whole oil group and look around and see what's turning. PE always catches my eye because I think, I don't know if you can confirm this for me, Dr. K, but I believe it is one of the stronger fundamental situations with earnings expected to increase 392% this year and 119 next year. What's that, Dr. K? Go ahead.
and their well, not just earnings, but their sales are skyrocketing as well. 126% in the last quarter, then 107% before that.
Yeah.
So they're a nice, interesting turnaround. And on a macro level, you know, if this global economy is going to gain some sort of traction as some indications show, that would seem to exert more demand on oil and commodities of various sorts. So, you know, the Commodity Research Bureau index, that hit a low back in early 2016 and then had a bounce. And since, well, I'd say over the last 3/4 of a year, it's just been trading sideways. But in terms of the long-term pattern, the low it put in early 2016 was a significant low based on what it's done since then.
Yeah.
So this could be telegraphing that you know, some of these reports have merit, and you know, things are gaining some traction, and therefore the Commodity Research Bureau should move higher once it's done with this long basing pattern. And the price of oil, if you correlate that, use something like the USO to the CRB index, you'll notice there's a very high correlation between those two. So, you know, checking around price of oil for bottom fisher, bottom feedings, that sort of thing, those types of formations could be worthwhile.
Anyways, let's see. I'm going to do Fang looks like you see, I mean, this is in a weekly. The weekly base here is going sideways, so this might be setting up. You know, it's really done a lot of shaking. This one's been like a short and a long and a short and a long. You just trade it back and forth in a channel, and it's worked so far. And this might turn. So let's see. RDC is another one. Maybe that's a white coffee and retest. I don't know. The volume's a little heavy here, but some of these could try to turn. So I would definitely be keeping my eyes on these as potential turnaround plays. So Let's see. Dow's been up, what, 40 something while we've been on. Now it's down 2. Earlier it was down 40, so it's all over the place. Energy name Rice. Yeah, that's another one. Might be trying to turn. You can see how it's formed a base, and it's looking pretty good. It even looks like a Head and Shoulders, you know, so it makes you think it's ugly. But again, these are stocks that had big moves, so you know they were under accumulation at one point, and now they're basing and they're trying to turn. And so that's, you know, that was another reason why a lot of these Chinese names, which have done really well so far this year, like NetEase, you could see it was forming a base, and as it turned off the lows here, you started to see pocket pivots. So, you know, it's already had a good move. So it's in a base building process, and this is how you find stocks off the lows of a base. Same thing with Momo, was a similar situation. Remember we talked about this. It had broken out of this long structure and pulled in, and turning off the 200-day or the 40-week moving average along with the support at the top of this structure and a turn, and then you got bottom fishing pocket pivots all along here. So boom, boom, boom. So, you know, this had already had a big move from here to here, so that's a pretty good move. And now you form a base and you come out, and you saw that with Weibo as well. So that, you know, that's the sort of thing I think you want to be looking for in this market. I don't think you need to worry about value or try to make some argument about value versus growth. And now that you've decided through some magical formula that value stocks are going to have big moves, I don't really think you have to do that. I think all you need to do is look at where the setups are. And there are some setups evolving among oil stocks, which I don't know if you want to call those value or growth. I think in PE's case, it's got some pretty good growth. So you just look at the setups, and I see a number of things trying to set up again as the market goes through this correction, you know, consolidation that it's been in for most, well, for all of the month of March and so far in April. So I would be focused on that. And looking at some of these leaders, maybe things that were on your buy list two or 3 months ago that have started to base, and so they could be coming up and around the lows of potential new bases. Sort of like, you know, think about NetEase back in December, Momo back in December, other stocks that were doing similar things. And so now look for those types of names now, and I think that's where you'll find the next crop of movers. And you don't have to categorize, you know, that, oh, the market's going to move into growth, or it's going to move into value, or it's going to move into dividend stocks, or it's going to move into utilities, or I don't know, whatever. Anyways, all you have to do is watch the setups, and I see a number that could be setting up. So I'm going to be open to those setups as I see them.
A lot of these macro predictions, by the way, even if they come true, it could take a whole lot longer than you think. And that's the danger of getting wedded to any sorts of predictions of that nature, or any prediction for that matter.
You don't have to do it. So, you know, I'll just go back to this Novo. You know, there's no need to even argue about whether this is going to have a big move or not. If you've done your homework and you think there's something here, well, what can you on what basic technical information can you buy the stock? And as I said earlier, you use this low as a stop, and you treat this as a viable gap. If it blows below that low, then you're gone, and it doesn't work. So, you know, there's no ego, no need to have a overriding theory that this is going to work, particularly when it looks like that. I mean, you can always get a rally to the 40-week line. That wouldn't be unsurprising. So, you know, so I think our point is that all of that stuff is just, you don't really have to go there. And if you think you have a trade based on what you're seeing in terms of the real-time price volume action, then you can act on that basis. So, and then last but not least, but and probably most importantly, don't rely on us to bless your trades. You know, what do we know? If you think you've got something here and you've done your homework, then take the trade as it comes. I'm not here to argue about stocks, you know, or what's your best pick and what's my best pick. It's like, screw that. I'm not a broker, you know, riding the elevator down from the office down to the parking lot, and everybody's going to throw their ego out there to see what setups they have that's the best. I'm just going to go with what I see in real time and operate on that basis. Anyways, that's all I've got. Anything to add, Dr. K?
Yeah, you know, it's just, the thing about, you know, there's two tendencies that are very strong, I think, in traders of of any stripe, and that is they love to catch a stock that's too late. When everybody sees it, everyone gets excited, and it takes a disciplined trader to know that it's too late to buy that kind of name. And the other issue is the ideas that get floated around. I mean, obviously, we put ideas out there, like I just said. I said something about the CRB and oil on a macro level might be turning around. Maybe the global economy is better, or at least it can endure for a little while, maybe another year or two before everything, if things are going to explode, that we might still have some gas in the engine to prop these markets higher. But those are all predictions, and they're not going to help me make any money. The only thing that makes me money is running my screens, keeping my eye on the right stocks, making sure the list is up to date, and trading on that basis. And so the market has an organic way of moving me into or out of names that have the right setups. And I think it's just that simple. I mean, that's what I did in the 90s over and over again, and that's what I do today. The principle behind what I do doesn't really change. And the thing that's different between me and anyone else is that my risk tolerance is going to be different. So, if you're looking at a stock or you're wondering what we're trading or why we're trading or what we're buying, when we're buying it, it's irrelevant to what you're doing. What you should be doing is figuring out what stocks suit you as an investor. And if you jump on board one of our ideas, it might be a little bit risky for your type of trading, in which case you can always position size smaller. Maybe do half the position to avoid getting whipped out. And that's all I got to say on that.
You and Forrest Gump. Okay, I'm just going to finish out real quick because someone's asking about Acacia. You can see Acacia has had bottom fishing pocket pivots. It's had them before, and it hasn't gone anywhere. So you can see, here, this looks strong, and it just failed every time. They have a new product out, and you can look that up. Go on the internet and search under Acacia Communications new products. They just revealed it at the telecom conference, but it's not like the stock took off, although it's been seeing better on balance volume here. Maybe it's going to finally turn. Now, that's an opinion, okay? What's the technical reality here is that you have a pocket pivot yesterday. It's pulling back on, what's the volume rate right now, Dr. K?
We're at minus 29%.
Yeah, so volume's drying up, so you could test the position here, use the 50-day as a stop, end of story. Anyways, and that's how you test ideas. You don't have to argue about them or have grand group movement theories or any of that sort of stuff. Or let's just say growth versus value versus dividend versus whatever else is out there. You just go with the price volume action. It's pretty simple. So, and leave the ego baggage. Lose the ego baggage, I would say. Anyways, on that note, that's all I've got. Let's get out of here. Back to trading. We'll catch you guys next week. Have a great weekend, and happy trading.
So long, everyone.